So the first time since March 2020 we've had our first rate cut. But all the signs indicate to me that they might have got it a little bit wrong in terms of what they're going to be doing. I.e., they should have done it in the previous FOMC. I feel like they underestimated the data a little bit and the economy is better than we first thought. Therefore, maybe this soft landing is here and this is going to ignite the bull market. Let's look into the data. So it looks nicer in terms of this a bit. So basically what's happening here, we've had our first little rate cut and this is a forecast of where they're expected to go. Now this is obviously a little bit of a forecast. There's going to be a couple of rate cuts either way. Now the reality is data will change. The stock market may give us some unfavourable results. The job market and all that kind of stuff may well also create little issues. So don't just look at this and go, oh, it's going to happen. Be careful. However, let's look at the fundamentals of this. This is important. It feels like they did get it wrong in a way because it was 11-1 to vote for 50 basis points. Normally not as clear cut as that, but it just gives an idea that they probably have underestimated how strong the economy is. And this is great for Bitcoin. It's great for altcoins as well, because cryptocurrency especially is a really big form of liquidity. And I'll come back to that in a second when we look back, but there is still going to be quantitative tightening. Doesn't mean QE is happening. Doesn't mean money printer goes on. It is the starting process of allowing consumers, hopefully, to spend money, borrow more, loans, credit cards, all that kind of stuff longer term. I will get onto it, which could be good to get us back to a normal level state where we have got low inflation and we have got normal, realistic interest rates. Now, was I expecting a 50 base points? No, I wasn't. I was saying maybe 25, just a bit of a toe tester. It kind of allows us to think, well, maybe we did get it a little bit wrong in terms of estimates. And when we were looking just before the cut, this was at 45% for a 25 base point and 55% for a 50. And this is for this next meeting, which is on the 7th of November. More likely, in my opinion, 25 basis points, which would be a 0.75% over the course of this year. And then maybe one more after that, which would be a whole 1%. Fair enough, right? The fundamentals of this is obviously very, very clear. We've got a lot more FOMC meetings and sometimes there'll be rate holds or sometimes be rate cuts, right? The UK, for example, very recently just did a hold on their interest rates because they're happy with the 2.2% inflation rate. That's a different country. It's a bit of a mess, our country, unfortunately. So it'll be interesting to see where we go. However, let's look at some data. Now, this is a tweet that I talked about. And this is a really, really good tweet in terms of data. We'll go a little bit deep with this one because I think it's important to note. Really good account to follow, by the way. So heading into the most divided Fed meeting since 2008, the market expecting 50 basis points. And this is the thing. The past has showcased that a 50 basis points is pretty fucking aggressive at the starting point. So that's going to be interesting. So what we see here, currently 65% believe that it should be a rate cut. Obviously that changed to 55% just before it all came out. And both times it didn't end very well in terms of over the last 40 years. And that's where it gets very, very interesting to note that, well, sometimes overall things get a little bit interesting. And you can see it through this tweet alone, right? So in terms of their first 50 basis points, and you can see there's 5 years here, and obviously 2019 is a little bit of an iffy one because it wasn't amazing, but 2001 and 2007 were financial crashes. Big ones, dot-com bubble and the financial crash, which you can very much see what happened. Not looking good. So the blue ones, obviously you can see what happened, and most of the time those were, well, the obvious ones were the fact of a 50 basis, Why is this important? Well, we've never really had a full-scale implosion since then. Obviously, COVID crash happened and whatnot, but this is going to be very interesting to see where it goes. Now, this data doesn't look great. All rate cuts cycles, starting with a 25 base points, are usually positive after 12 months. However, the last two Fed with 50 basis points at the starting point literally were lower by 15 and 22% over the next 12 months. Now, obviously, yes, we talk more about crypto. This is the S&P 500, and the S&P 500 currently is almost at all-time highs. The Dow Jones is at all-time highs, and Nasdaq is on its recovery. So, interesting, I know. The other part of this, what I found very interesting, was this. as I've alluded to it, the two big ones. Now, as I've said, it's been a long time since 2007. And we've never really had a big fallout realistically since, apart from obviously COVID, and you get the idea. But when we talk about this as well, going onto it, of all the ones which did not start with 50 base points, you can see here the returns are really good, like brilliant. So it's going to be very, very interesting to watch in terms of the starting point of the aggression here. So makes you wonder, should we have just done a 25 base points September and then 25 base points now, which would be the same result? So hopefully, fingers crossed, this does not lead to a recession. Ultimately, history says that 50 basis points is only needed if we are entering a recession. I'll come on to that word in a minute, which I know is going to scare you. But as I've alluded to it before, in my analysis and in my opinion, a recession isn't the be-all and end-all for life. Markets do recover. And most importantly, when we look at what's available now with cryptocurrency, obviously gold had a really good recession in the previous cycle where it did return 40%. Yeah, it happens, right? From the rate cut, by the way. I looked at that in my last video. Make sure you subscribe to the channel if you want to see more stuff like that. Please do like the video and comment what your opinion is too. So it's going to be very, very, very interesting to see where we go. This is all treading in the unknown, right? Some would argue we are behind, right? We should have been cutting a lot earlier, which makes sense, right? So yeah, this is where it gets interesting, the soft landing narrative. And have they got it wrong? Well, we don't know fully yet. So let's look at the obvious. The broader context of this is a very simple article. Lower interest rates will encourage more spending, more investment, more economy boosts and loans, jobs. Yeah, good. The data isn't terrible. Is not terrible, but it could be better. However, when you think over time into 2025 and 2026 with lower interest rates, we may well find that we might have had some issues because it's taken too long to get the interest rates too low. And there may well be people relying on capital, higher interest rates, ooh, ugly. So long term, technically, we're bullish. That is bullish. Once they rotate back from QT into QE, very bullish. But it's not going to happen overnight. What's going to be interesting to see what the reaction will be with Bitcoin and cryptocurrency, with liquidity, obviously gold as well, if the S&P takes a turn. We have an election. Q4 is often bullish. Q1 is going to be very, very interesting. Now again, we go back to that whole, did the Fed wait too long? And this is where it's interesting. America has officially defeated inflation without experiencing a recession. Yet, right? That's where it gets into it. And obviously going back to what I talked about, the 50 basis points is a really interesting factor in terms of the past. And when we talk about obviously monetary policy and all that kind of stuff, QE, QT, and we will keep it until we're confident the job is done. That was said in August 2002 regarding the central bank policy. There's a lot of factors to get your teeth into, and as I said, far too early. Today's rate cut, however, could be rare and an important case in which the Fed's message clearly does get through. The long-awaited policy change will generate enormous media coverage. And it did. The Fed were all over the place. You've got people talking about it that you've never even had any kind of inkling about it, going, what the hell? You had the spreads on the futures market, which was absolutely through the roof on all markets. It was absolutely crazy. But this part, as I've alluded to it, I hope it's not a self-fulfilling prophecy. If the Fed succeeds in brightening the economic mood of the country, then perhaps businesses will keep hiring, rising. You get the idea, right? Is it just a screen? I hope not. So we'll see how it goes. The final thing we realistically need to cover is obviously what was said. Powell is stating that the economy is in good shape. Don't want it to be a mess, do we? It's in a good shape and it's growing in a solid pace and inflation is coming down. You know, there's no rush to get this done. Stuff like that makes you uneasy, but I hope we do not come back to this video and go, well, they got it fucking wrong, massively wrong, because that could actually genuinely happen. The data of the past gives me little scary vibes, and it does, and it always does. You always got to look at the past to see future data and obviously to analyze the market. The last two times we started on 50 basis points, we entered some horrific crashes. Yeah, that could be the issue. As a community, as a country, as a way of life, investing is going to be very interesting over the next 2 years, right? We need to keep an eye on this. The Bitcoin ETF narrative, so to speak, is will we start seeing inflows into Bitcoin more and more now that we know what is happening? Now we've got a bit of a forecast and a future gauge. We'll see. So keep your eyes on that. Obviously, the Bitcoin analysis I did yesterday or the day before, as I say, subscribe to the channel. Make sure you are, because I know you're not subscribed, right? We are almost in that box of interest. Now, this is where we're going to talk a bit more technical. Sorry. This has to kind of be caught and captured, let's just speak in that term. If we reject from here, it's going to be ugly and hurt. But we have to look at altcoins. We have to look at what is happening there in terms of dominance. We've got to look at the S&P 500, the Dow Jones, etc., because we need to understand where we're going in terms of the long-term game here. Everyone's bullish. That scares me. Everyone is thinking this time is different. That also scares me, right? But for me, I still think Bitcoin's undervalued, and I think Bitcoin will be an absolutely massive superpower if we get some interesting price action, certainly with the S&P 500, with the NASDAQ, whatever, and people start panicking because of that past data. We have to look at the obvious. We are lower than what we were. There's still a very slim chance of a left translated cycle, and we're going to go into an absolute hype rally, but we'll see. Whether the market ends in Q1 of next year or Q1 of 2026, we don't know. This is the thing. It's a beautiful market, right? Let's look at the obvious. The weekly time frame right now is not looking too great in terms of structure, but we are showing signs of life going into a potential breaker structure. If we do get over $63,000, $64,000, it's going to settle a lot of nerves. Realistically, it will, because all we've done every single time is gone to the highs and went to the lows, gone to the highs, went to the lows. And this is slowly starting to change. Hopefully, fingers crossed it does. We have to be very, as I say, very mindful of that, because we don't want to have a fall in structure point, which is going to hurt. And we're going to go back into the lows and go, oh shit. So we need to keep the momentum going. The other bit of momentum, which is very interesting, is the dollar. We've obviously went to a level of interest, bang, news would spike that volatility for obvious reasons. And for obvious reasons, yes, you've got to look at the interest rates, and it could also weaken the dollar. We kind of want that, realistically, because what we've seen now is this. We gapped up the other day, new all-time high, S&P 500, tick. Scares me though. Oh, fuck me, we're on all-time high. That is just perfect for a crash. Yeah, you get the idea? So it kind of worries me in a way that we've obviously looked at the past data and we've seen what's happening with an aggressive starting point. Now, there's some people that would argue maybe, higher is better, but the past data of the previous, I know, I keep talking about it, but you get the idea. So we don't want to go too heavy-handed just yet. It takes time to get to these points, but ultimately, there's only 8 or 9 stocks that are really ruling the roost right now in this, and most of them are technology stocks. And if we get a technology bubble, oh dear, it's going to get very, very nasty very, very quickly, and people may well panic. The Bitcoin dominance is continuing to create little ripples higher. We had a bit of a pullback because altcoins are actually doing very, very well. Look at all this green, the others.d, the others/BTC, all nice and green. Totals, green, yay, that's good to see, right? It is for the first time in a while, but it's still very, very, very early days, right? Because we don't know what's going to happen. When we then cycle over to the NASDAQ, well, the NASDAQ, yeah, futures, hello, we are starting to break structure, and probably, an obvious change of character is income, or break structure, BOS, is coming in here. That is really good. But what is very interesting is the VIX went lower, which would indicate maybe this spike was the bottom and that was it. We're at the point where we're going to go higher, but it depends on how high we go. As I've alluded to it, we have an election. That election, no one wants to go into an election with a really crappy stock market and bad data, right? So what if this is a final blow off top? What if we are going to top out in Q1 of 2025? What if it all goes into Bitcoin and we create that big massive rally wave and it goes interesting? Huge, right? Dominance at some point will have to stop, and we will get a rotation down. Obviously, yes, we could see more in the Bitcoin ecosystem do very, very well, with institutions buying, with runes doing well, ordinals, whatever it may be. 100%. could be possible. But you got to look at the altcoins. The altcoins, like, for once, Ethereum's did a little bounce. Solana is starting to bounce again. Even BNB, you know, is still at these stupid high levels, which is good to see. So we've got to look at that. In terms of USD values, some of them are doing incredible. The likes of FTM is just boom. SU is boom. You know, it's gone absolutely crazy. Even the likes of NIA is starting to break out and show signs of life. So things are starting to really progress here and show signs of life in terms of the altcoin market. But as I say, it's only day one, for fuck's sake. Like, just chill out, mate. So yeah, be very, very interested to see where we go from here. The only thing I would say about most of this is we've got to err on the side of caution. We really do. Obviously, gold is still rallying up higher. Yeah, it's fine. But we don't want to get to a point where there is genuinely a recession because the job market comes in shit over the next few months and people flap and then it's all fuck, oh God, oh shit. But as I've alluded to it, that job market data may be very, very, very interesting longer term. And it could allow Bitcoin to get an actual test. Can it actually be a flight to safety and it actually genuinely work? So let's look at some altcoins. For obvious reasons, Ethereum, if you missed all the drama, Vitalik was singing on stage the other day, but this on the weekly time frame is still looking horrible. This could hit this level and reject and go lower. I just don't feel like there's a much of a flavour for Ethereum at the minute. There really isn't. You know, you could look at Solana and be like, yeah, sweet, cool, it's holding levels. Whereas it looks that chart looks 10 times better than the Ethereum chart, let's be honest. Stacks, I've just bought that today. Well, I bought more of it to get my dollar cost average down because I bought a bit too high. Fundamentals of it, really, really strong, looking really good and showing signs of life. You know, for me, it could well rally up very hard. This is only a $2.2 billion asset, and you look at the size of Bitcoin as an ecosystem, that could be absolutely crazy. Even Chainlink starting to show signs of life from this bottom. You know, as I say, a lot of altcoins are starting to show signs of life, and we've got to kind of look at that and think, well, what's happening? Well, dominance may well start to drop, but it's going to be very, very, very interesting. To finish off, though, to go off what I've been talking about, obviously, yes, you can see stacks here. The BTC pair up nearly 7% today. NIA up, you know, nearly 4% today. Crazy moves on some of these, but they are in downtrend still, so be mindful. But I don't think dominance is going to top out yet. Dominance for me, it's still at that point where it's going to be very, very interesting to see where we break from and go from. Things will get a lot worse before it gets better, but as I've talked about in previous videos, these total 3 charts and stuff like that, and these higher time frames, you just got to keep an eye on it. If this starts breaking structure and change of character tab and we start rolling up, things are going to get interesting because that's what happened last time. Like, when you think about the last cycle of altcoins at the start of this year where we had that little run, it was literally that. It was a tiny little sliver of craziness, and it was crazy at the time, and people probably go, oh, what are you on about? But things did move. Bitcoin moved aggressively. A lot of altcoins ran hard and we had a little bounce. What if it really runs and goes even higher into a proper cycle for the next 6 to 9 months? You are going to absolutely shit yourselves, and you're probably going to wish you bought more. You're probably going to wish a lot of things, and you probably wish, for some people, you never gave up, which does make sense. So we've got to be very, very mindful. So again, if I look at that total 2/BTC is horrendous, but we might have bottomed out. But the final thing to talk about is obviously others.BTC. This was that little run that we had where the market capitalization of assets did actually grow in dominance. We're back at these levels again. We're back at this buy good assets and obviously take fucking profit up here for obvious reasons, right? We have to be so careful with what we buy. Everything is crazy at the minute. There's too many coins. There's always going to be too many coins, but realistically, what happens? Well, this could rotate round into it. What if Bitcoin monies rotate into altcoins at the lows? Liquidity returns, consumer spending returns, investments return. People want to get in the market because I've said it in my last video, right? If Bitcoin hits certain levels and goes to certain points up here, like these stupid $80,000, $90,000 levels, everyone's going to talk about Bitcoin, especially if other things are coming down. What if the S&P does come down and Bitcoin goes up? What if all the altcoins then get a lot of interest and eyeballs because of that alone? And then the BTC dominance starts to slowly drop. and the others.d starts to go up, and Solana.d or Ethereum.d and Polkadot.d all start to go up, your investments will make some nice monies. I'm done.